Hello guys, Lucas Santos here from ACY Securities, and I have the minutes on my hands. Yes, the RBA minutes, the Reserve Bank of Australia. If you want to have access to this information, it's easy, it's public. So you just type Reserve Bank of Australia minutes on Google and there you have it, it's the first link. And the things are not looking great for Australia, unfortunately, as I can tell you. It is a bit of a reading, so you may be spending 10 minutes or maybe 50 minutes if you note down everything, but you don't have to do this because I have done everything already for you. So thumbs up on this video and comment if you have any questions regarding the RBA. But anyways, coming back to the main point of the video, the first thing that I would like to, state here is at on the RBA, the meeting, the minutes, they revealed that while there was a consideration for a cash rate increase to 4.35%, as you already know, the decision led towards one more time for data-dependent approach on the on the RBA. So in another word, means that they did pause because they need more time to evaluate, to look, to study all the economy around Australia and see if it would be fair to raise rates or even maintain again on a pause, right? Another thing is that the reason, the main reason of the holding, I'm reading it because I don't want to miss anything, is it's very, very, very strange. It's not strange, but I would say it's very precise. They say that it was an economic growth, it's lacking economic growth contribution to lower inflation and recognition of several fiscal challenges faced by households. So in other words, in an easy language, meaning that Australia is not growing. Australia is not growing and inflation is coming down, so they don't have to raise rates. Well, that's a fair point because raising rates is to not stimulate growth. So if we don't have growth, if inflation is coming down, then we don't have to raise rates because all the raised rates that they have done already in the past, it's coming to influence the market now. So that means that all of the effort, all of the work they have been putting into raising rates since last year, it's coming to work now, and it's lowering the inflation and it's lowering the growth on Australia as well. They've made very clear why a 25 basis point cash rate to 4.85% was discussed. So they did discuss to raise 25 basis points, but in the end they left in a pause. It was decided that more observation time was needed before such a move, extending the pause. So maybe needing, and they put it here, the members agreed on a possible further tightening to return inflation to target. Yes, inflation is lowering, but inflation is not on target. 100% is far away from target, right? So 2 to 3% is far, far away. So we have a lot of work to be done in Australia yet. And just, my take on this, it is a very bearish Australian dollar for the coming month. So we may be seeing even more further dips on Australia dollar and US dollar. I know it can sound very like, oh my God, the price action is saying this, the price action say that. Yes, the price action can say whatever, but the economy in Australia is not saying that it's bullish, right? It's bearish at the moment, and the central bank is not hawkish, it's dovish. It's data dependent approach. So yes, we may have further dips on Australian dollar, especially against CHF, the Swiss franc, as I've mentioned yesterday on Monday. So if you haven't watched the video yet, come back there and you know why. But finish this one first. And then we have as well US dollar being data dependent but strong against Australia dollar. Alright, so for today that's it. If you send to your friend, now he knows why it's not a good opportunity to long Australian dollar at the moment. And please, again, subscribe to the channel. Give us a thumbs up on this video. Comment if you have any questions. And I see you in the next video.